Do asset quality or profitability have an impact on banking brands? And how do you calculate the emotional connection to a banking brand? To answer these questions, the banker has once again teamed up with consultancy BrandFinance to rank the world's most valuable banking brands. The results of this research are being discussed here today at the London Stock Exchange, where a number of bankers, finance professionals, as well as politicians have gathered. They will also discuss the current state of the banking sector. This is particularly relevant in the UK, where established lenders are still dealing with pressing issues, while new names have entered the market and are fighting for the same customers. Since the financial crisis, trust in the banking sector has been broken. Trying to quantify banking values as a measure of bank success and customer satisfaction is now more relevant than ever. Aside from a number of institutions with very strong brands, such as US lender Wells Fargo, which leads the banker's top 500 brands ranking, the industry as a whole continues to be confronted by skepticism and is far from regaining the public's trust. When it comes to customer service and loyalty, banks are often encouraged to look outside of the sector in search of inspiration. Apple, the stylish and widely popular electronics and software house, is often referred to as a leading example. But Mervyn Davies, partner at Corsair Capital and former chief executive of Standard Chartered, chooses a different example. Rather than to Apple, Mr. Davies prefers to compare banking to a lemon.
So, here's a versatile fruit and berry used in salad dressings, limoncello drinks. It's used with fish. It's used to make cakes, lemon drizzle cake. It's extraordinarily versatile. It's always dependable. And it's very, very global. But it's a brand that probably, if there were such a thing as a brand manager for this, they would want to make it a little bit more friendly and wanted to make a little bit warmer, because it is not, whenever you ask for people for their best berries or best fruit, it never comes up as their top 3 brands. So how does that relate to a bank? Well, banking was a lemon. Banking was a trusted industry that you knew it was reliable. You knew that, you may not like your bank manager or you may not like some of the things, but it was always trusted.
Mr. Davies singles out the role that the CEO ought to play in regaining such trust.
I do believe that there's never been a time more than today where the CEO owns the brand. Chief executives of banks have to be obsessive about ownership of the brand. They also have to deliver for the shareholders, and I think the thing that's going out of the window at the moment is, I think you have to do both. You have to walk and chew gum. You have to produce for the shareholders, but you also have to produce a service and an ethic and an offering for the customer that is trustworthy, reliable. So I do believe that the chief executives are going to have to do even more to focus on brand building. I do believe that segmentation of the customer base is going to go even deeper in the industry.
A CEO who has possibly achieved this is Antonio Ortosorio at Lloyds. Under his leadership, the state-rescued UK lender turned into profit, while its brand value rose to over $4 billion, $1 billion higher than previously recorded, pushing Lloyds up 7 positions in the bankers' ranking to 53rd place. Mr. Ortosorio believes that smarter customer segmentation is needed in the UK market, where retail products often lack diversification.
That in the UK retail market, you really look at products, current accounts, mortgages, savings, and not really at customer segments, such as we are doing now at Lloyds, which is to look at affluent segments, mass affluent, mass markets. Customers are a whole. They use a mortgage from a bank, a credit card, a debit card in different moments of their life, and they are not products. And so it's interesting to see that while in the corporate space in the UK, you look at business banking, SMEs, mid-corporates, large corporates, you don't look the same way in the retail market. In the Lloyds case, we are changing that and adapting the internal systems to look at customers as a whole, to segment them, to offer them differentiated offerings according to their needs. And that is also a big component of our multi-brand strategy, whereby we treat Halifax customers as per their needs, while Lloyds customers are quite different, or Bank of Scotland.
Others agree that competition needs to be based on better segmentation and more astute branding. New entrants in the UK retail space have indeed focused on a new branding philosophy and a customer experience that originates outside of the banking sector, such as the supermarket space, for example, for Tesco Bank. But banking presents its own peculiar challenges, often hard to overcome for new names. If stronger competition ought to fix the banking sector, as policymakers are suggesting, can there truly be more or better competition in an increasingly regulated environment?
Clearly, banking has always been a highly regulated sector, and as a result, it means that governments are reluctant to see banks go bust, which is one of the things we've seen in the crisis throughout the world. And in a way, that kind of negates against, the proper sort of capitalist dimension in banking. But the other factor is that it adds cost to banks, and it makes the cost of becoming a bank very high. So you've got to raise a certain amount of capital, you've got to have been operating for a certain amount of time before you can actually really access the market properly. So it's not really a very attractive investment proposition for a newcomer to come into and start from scratch. I mean, that's why I think the incumbent banks will still be the dominant players in the market in the UK and most other markets for many years from now.
The group of established banks may indeed still dominate the market for the foreseeable future. But within this group, as lenders adopt different business strategies, the gap between the best banking brands and the rest may widen further.